Is Bristol-Myers Squibb a good buy at its current price range? A question many investors might be asking themselves as they navigate the ever-changing market landscape. Bristol-Myers Squibb, a household name in the pharmaceutical industry, has recently been grappling with significant challenges. One such challenge is the loss of exclusivity issue with their top-selling drug, Revlimid, a situation that has led to a marked decline in sales and has consequently impacted the company's stock price. The repercussions of this issue are not confined to sales alone. The company's debt levels have seen an uptick, due in part to aggressive mergers and acquisitions activities, further adding to investor concerns. But as we all know, the world of investing is not black and white. While these challenges might seem daunting on the surface, they must be viewed in the context of the company's overall economic outlook, business moat, and financial performance. So, is Bristol-Myers Squibb a good buy at its current price range? To answer this, we need to delve deeper into the complexities of the company's operations and performance. So, stay tuned. To answer our burning question, we first need to understand the economic outlook of Bristol-Myers Squibb. The company has had its fair share of challenges lately, with a notable decline in overall revenues and lower projected revenues for their top-selling drug, Revlimid. The exclusivity loss of this drug has certainly put a dent in the company's financial armor. Bristol-Myers Squibb has made efforts to offset this decline with its growth portfolio and mature portfolio. However, these have not been able to fully compensate for the drop in Revlimid sales. This is a crucial point to consider as the company attempts to navigate its way through these turbulent times. It's worth noting that the generic versions of Revlimid, released by Sandoz and Teva, have also eroded Bristol-Myers Squibb's sales. This competition in the market has further contributed to the company's current economic situation. Looking at the consensus estimates, they suggest minimal growth for Bristol-Myers Squibb's top and bottom lines through fiscal year 2025. This is not the most promising news for investors looking for high growth potential. However, it's not all doom and gloom for Bristol-Myers Squibb. The company offers a stable dividend, and its dividend coverage is likely safe, which could be an appealing factor for income-focused investors. Additionally, the company has been proactive in diversifying its portfolio with new drugs and treatments, such as the recently FDA-approved cancer immunotherapy drug, relatlimab. In conclusion, the economic outlook for Bristol-Myers Squibb is somewhat challenging. It's a rocky road ahead with declining revenues and fierce competition. However, the company's efforts to diversify its portfolio and the stability of its dividends do offer some glimmers of hope. Given these figures, it seems the economic outlook for Bristol-Myers Squibb is somewhat challenging. However, this doesn't tell the whole story. Now let's explore Bristol-Myers Squibb's business moat. A company's moat, as you may know, refers to its competitive advantage over others in the industry. And Bristol-Myers Squibb has quite a few arrows in its quiver. One of the most significant is the company's continued success with the cancer treatment, Opdivo. This blockbuster drug has been driving strong performances quarter after quarter, benefiting from approvals in new tumor types and increased use as an initial treatment for advanced lung cancer. But Bristol-Myers Squibb isn't resting on its laurels. The company has been actively diversifying its portfolio. In fact, they've inked 2 deals with biotechs Agenus Inc. and Eisai Co. to develop and market new cancer drugs. Such strategic partnerships not only add breadth to the company's product line, but also reinforce its standing in the sector. Furthermore, the company's robust research and development initiatives are a substantial part of its business moat. Bristol-Myers Squibb recently received approval for a new cancer immunotherapy drug called relatlimab. This drug, approved for use in combination with Opdivo, has shown promise in treating advanced melanoma by reinvigorating the immune system. The company expects this treatment to generate annual sales of over $4 billion. These developments demonstrate Bristol-Myers Squibb's commitment to innovation and diversification, both of which are essential for maintaining a strong business moat. Despite facing challenges such as the loss of exclusivity for its top-selling drug, Revlimid, the company is demonstrating its ability to adapt and evolve. Despite the challenges, it's clear that Bristol-Myers Squibb has a strong business moat, bolstered by its innovative product pipeline and strategic partnerships. Finally, let's examine Bristol-Myers Squibb's financial performance. In recent years, the company has faced some challenges, notably with its top-selling drug, Revlimid, where the loss of exclusivity led to a decline in sales. This was reflected in the company's lowered guidance for fiscal year 2023, with a decline in overall revenues and lower projected revenues for Revlimid. However, amidst these challenges, Bristol-Myers Squibb has shown resilience. The company reported second quarter earnings that exceeded Wall Street estimates, with sales of its cancer treatment Opdivo driving the strong performance. Furthermore, the company's approval of relatlimab, a new class of cancer immunotherapies, has added a promising product to its pipeline. Clinical trials have shown that relatlimab more than doubled the time it took for advanced melanoma to worsen compared to Opdivo alone, and the company expects the treatment to generate annual sales of over $4 billion. On the dividend front, Bristol-Myers Squibb offers a stable payout, and its dividend coverage is likely safe, making it an attractive proposition for income-focused investors. However, it's also important to note that Bristol-Myers Squibb stock has underperformed over the past 10 years. This could be a concern for some, but others might see it as a potential buying opportunity, especially given the company's recent successes and potential for future growth. While Bristol-Myers Squibb has had some financial difficulties, its recent successes and future prospects may offer potential for growth. So, is Bristol-Myers Squibb a good buy at its current price range? We've explored the company's economic outlook, business moat, and financial performance. We've seen how its aggressive M&A activities have increased its debt levels, and the challenges it faces with the loss of exclusivity for its top-selling drug, Revlimid. However, we should also consider its growth portfolio and mature portfolio, which, while not able to completely offset the decline in Revlimid sales, still hold potential. The company's recent approval for a new class of cancer immunotherapies and its robust pipeline of new drugs could provide some upside potential. Yet, there are risks. The company's valuations have been impacted, and projections suggest only minimal growth for the top and bottom lines through 2025. But for those who value stability, Bristol-Myers Squibb offers a consistent dividend, which is likely safe. Ultimately, the decision depends on your individual investment goals and risk tolerance. As always, thorough research and due diligence are key. Thank you for watching. If you found this video helpful, please like, share, and subscribe for more insightful content.